Hey there, welcome to the video. I'm Scott Welsh, and in case you didn't know, the markets have been kind of crazy lately, kind of crazy bad. So we're going to try to solve that problem today in the video. But first, happy holidays if you're watching this right around December 26th when it's being released. Hopefully you had a wonderful holiday. This is a shot of me actually yesterday celebrating with family. I love personally to get dressed up. I get very festive for the holiday here. And I was at this point very excited for the present I just got. So there's a little shot of me. Hopefully your holiday was equally as fantastic. All right, three things today for the video. We're going to talk about the horrible plight of index fund investors, especially in December, especially right now. Is there a trustworthy system out there that could help this horrible December? And I might just present to you a down market superstar trading system. Wouldn't that be fun? First, a disclaimer, it's all hypothetical. Don't risk more money you can afford to lose. All right, don't be stupid and understand these are hypothetical numbers. All right, let's talk about the index fund trader's nightmare. As I'm tallying statistics, the market is down over 14% through December 21st. That's a big down month, and it's basically been straight down. I counted at least 7 down days in a row at one point. If you're holding an index fund and this is your trade for a living lifestyle, or you've quit your job and you're going to take profits out of your index fund investments, that's not fun. That's not fun for anyone, but 7 down days, and they haven't really been small down days either, have they? Now, I guess my first question would be, how does that treat you, experts? Now, the experts, of course, tell us that we normal people cannot trade, should never trade, never will trade, and trading's stupid, okay? So if we're not going to be traders, then guess what we're stuck with? Watching the market goes down, because if we're a buy and hold investor, we're not buy and trade, we're not buy and sell, we're buy and hold, which means we've been holding with our life savings as it goes down, down, down many, many, many times. I don't know how that would treat the experts. I don't know what they would say to us if we went to them. Experts, what should I do? I don't know what they'd say. I worry about any millennials. Have you seen the research? There's a study out that 60% of millennials could not afford a $1,000 emergency. Their budgets are so tight that if their car broke down and cost over $1,000, they could not take care of it. So if a millennial is an index funder, they are that tight, how would that feel to go down, down, down? That wouldn't be fun. How about someone who got into the market after 2008? I think about this, even though it's during the holiday season and I'm very festive. I worry about people who started at, say, March 2009. From March 2009 to the end of 2018 has been a wild upward ride filled with riches and merriment. If you started then with an index fund, A, you'd probably think you're a genius, maybe you are, and B, it would have been nothing but basic fun times, right? Until now, actually. February 2018, okay, a little bit rough, but right now, speaking to you in the middle of it, it's maybe the worst time since 2009. Think about that. That's a little rough. Now, if you're in 2008, you realize this is nothing like 2008 at this point. But if you never saw 2008 and you've been index fund investing for a while, oh mama, this has not been easy. Okay, this market in December specifically has been bad for anyone to handle. Side note, this is only bad if you're long, right? I mean, if you're short, are you sad right now that your profits have been rising substantially for a million days in a row? Of course not. If you're a Forex investor, have you seen really any of this? I mean, it's not really Forex. If you just watched Forex markets, you wouldn't even know this is going on, right? Forex is just not really correlated that much. Not to say Forex is easy or it's been a bowl of cherries, which I don't like that much. But anyway, it's been bad for anyone. But if you've never been around for bad trading days, 2008-ish, and December probably rocked the world. So what do we do? Well, if we did go to those experts and they were an expert, hmm, they would probably say, hey, listen, these down days are just part of the game. They would tell us 50% drawdowns or more happen all the time. You can go on your YouTube and find Warren Buffett and or Charlie Munger telling us that if you can't take a 50% drawdown, you should be out of the game. Those are smart people. They're probably right. And that's what the experts would tell you, that it's only 14% ish, it's only 7 to a million down days in a row. It's no big deal. This is part of the game. Okay. I mean, great. Question mark. I mean, that's the best system in the world, is that we have to accept 50% drawdowns or more, right? Okay, then fine. But you know what causes depression, right? Depression is rising in the United States lately, according to studies. You know what is a big problem with depression is when you feel like you have to just accept fate. There is no hope. Now, I'm not saying this down market could cause depression, but I'm saying that's exactly what leads to a depressed feeling. There's nothing I can do. Oh, you wake up wake up a week ago, oh, market's down again. Well, not tomorrow. I'm optimistic. And it's down again, down again, down again. Ooh, I'm just standing here getting slapped in the face for a bunch of days in a row. It's not going to make you feel good, right? But you know what could make you feel good? You know what does stop depressed feelings? Studies shown, lots of studies today. Action. When you're feeling down and you take action, you immediately feel better. That's a fact. So instead of just accepting our fate, what can we do? Well, we need something to do, yes, but we also need to trust that thing. This is not the time for willy-nilly strategies, right? When times get tough, we need a sure thing. We need a system that's for sure going to help us. You're in dire need and you've got to get yourself to the hospital. You don't want to hire a helicopter pilot who doesn't have a license. I don't know why you're hiring a helicopter if you're hurt, but you get my point, right? You need something that for sure is going to get you there if you're in trouble. And if you're in this bad market for long traders, you need something that's trustworthy. So let's find something that's been around. Let's find something that we don't even really need to test, right? Think about that. If something's been around for 100, 200, 500 years, would you really need to trust it? Would you really need to do your own due diligence? Of course, you should do a little, but wouldn't you go into that feeling, I'm pretty solid. I might tweak it a little bit, but I trust this is going to work. Well, here's something that we can trust that's going to work, and it's called the Death Cross. Oh, I love that name. It's so authoritative. Now, Death Cross is a trading system that's been around just like we need for a long, long time. In fact, this is a picture of where the Death Cross trading system was originally created. I think it was in 1578. I believe I could have that year wrong, but a bunch of traders got together and they created this system, and here was the spot. So that's interesting to you. For as long as we have history, recorded at least, traders have looked at the 50-period simple moving average and the 200 simple moving average. Hear any traders talk today about on TV, famous ones, you hear them talk about moving averages, guess what comes up? The 50 and the 200. It always comes out our mouth, right? And when those two simple moving averages interact, that's where all the magic starts. Now, you may be asking yourself, why those numbers? Why 50 days? Well, there's 5 trading days in a week, that's 10 weeks. Okay, well, why 10 weeks? I don't know. And why 200? Why 20 weeks? I mean, you're going to have to ask the elders, right? I showed you a picture. Just look up that picture and then go find them, and maybe they're still there. But regardless, no one questions these numbers. We just use them, right? That's what the elders taught us, right? So specifically, what are we talking about? Well, you guessed it, I'm sure. For a death cross, death means bad, market's going down. So death cross means we're trading short. We're trading going down. So when the 50 crosses under the 200, when the 50 crosses down over the 200 and closes, we initiate a short position. Now, there is an opposite to this death cross, and that is the golden cross, the doppelganger, if you will. For a golden cross, we go long when the 50 crosses above the 200. And that's it, right? If you like simple, can't get simpler than that. If you like something that's been around since the dawn of time, can't get simpler than that. Well, is it legit? First, let's take a look at the trade. Here on the SPY ETF, it's the S&P 500 proxy, right? Here's the 50. Oh, crosses. Now the magic's sure to happen. Crosses below, and we initiate a short trade. Now, see this cyan line here? That's the end of a long trade, because guess what? When the 50 crosses above the 200 and closes, we initiate a long position. So we were in a long position for a long time, right? The market has been good for a while. We just would have gotten out in profit, because cyan means profit. So we just ended a profitable trade. Of course, we lost a lot of profit there, but oh well. From where we started, it was profitable. Yikes. And now we just would have gotten in right here on this bar. We would have gotten in our short trade, and we'd be in that right now. Look at that. We just got in here when it crossed. It crosses, you get in at the open of the next bar, and then look at this party. Down, 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 profit, 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 profit. So we just ended a profitable trade, and now we're in a profitable trade. Instead of gnashing our teeth, can you gnash teeth? Instead of gnashing our teeth together and worrying about our index fund holdings, we would have ended a profitable trade and started a really, really profitable trade. How nice would that be, right? Isn't that fantastic? Okay. Now, let's look a little bit at the results. Now, the elders, when they talk about this system and when the system was created, they only talked about the crosses themselves, meaning no profit targets, no timed exits, nothing. The origin of this trade, when they got together and voted, was we go long when the 50 crosses up, we hold it, and we go short when it crosses down, and that's it. And you just trust your life, right? You trust that the 50 and the 200 interaction will take care of all of our profits and get a chunk of that trend. Well, even though it's blasphemous, I found that just the crosses are not enough. I think we need a stop loss. So I put 1-1. See that? I like saying that's, so I said I put 1-1. It didn't like my grammar, but I thought it was funny. Is it funny? Probably not. Anyway, here are the results. For the SPY, using the golden cross up and the death cross down, since, well, for the last 20 years, do the math, profits look at $23,558 with a max drawdown of a mere $5,300. Look at that profit factor, percent profitable, pretty good. Look at that largest winning trade. Now, if we're trading this on a $10,000 account, look at that. We could have had one trade, a $6,500 winning trade. This system catches big moves, right? I think that is a fair assumption. I think by any metric, this worked, right? This is profitable. The death cross and its friend, the golden cross, worked absolutely fantastically on the SPY. It absolutely worked great on, quote unquote, the market. I mean, that's kind of what the SPY is, right? And if you're curious, it absolutely annihilated buy and hold. Just like 4 times as much. I mean, it just annihilated it, right? Now, we did have to add a stop loss. So you saw the entry for the SPY. You have to set a stop loss, an emergency stop loss of $1,360, according to my testing. Okay, now that's for 100 shares, right? Do the math. If you had 1,000 shares, then you'd be using a $13,000 stop loss. If you use 200 shares, you multiply by 2. If you use 50 shares, you divide that number by 5. Okay, this is assuming we use 100 shares, because if you're an options trader, you'd be thinking about 100 share increments. So I kept it there. right? But think about this. This system is guaranteed to work. It's guaranteed to be profitable, at least to some degree. What do you mean guaranteed? There's no guarantee. Well, first of all, the elders created it, so that's enough, right? If the elders created it, then it's going to be profitable, all right? Done. Enough said. But it has to capture every large move. You understand? When the 50 crosses, that is a long-term move. It's not a daily twitch. When the 50 goes above the 200, if there's a big move going on, you will be in it. Now, of course, it's not going to work if it twists back around and doesn't go anywhere. Of course not. This system loses trades, right? It only has a 57% win rate, of course. But if something big happens, you're going to be in on it. That's a fact. There's no way you're going to miss anything. Maybe if you get in and stop out and then it re-enters in the same direction, that might be a time where you wouldn't participate. But clearly it participates in all the big moves. And clearly we'd be doing great right now here in December 2018, right? It's trend following in nature, right? The big trend following elements are breakouts and moving average crosses. This is a moving average cross, trend following in nature, and that means it's going to be awesome when the big moves happen, right? Don't believe me? Check this out. Here are the annual returns for the SPY, right? Now look at the troubled times. 2008, massively good. Look at that, 55.97 on a hypothetical $10,000 account or whatever size account you hypothetically wanted to use, right? And even then in 2009, right, this troubled area, it went very, very, very well. And then if you look down into probably, I don't know, it's a 3-year, I think it's the worst stock market period still recorded in the last 20 years, right? There are others. But really since 1998, I mean, this was a horrible time for stocks. And look at this, profit, 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 right? So markets were going straight down hardcore, and this system would have had you in profit during those times. And look at 2018. We've had great profit for a portion of the year, and then a dramatic downturn for this last portion, right? It would have been just fine, and you'd be sitting on a really, really big winning trade right now, depending on how the market goes the rest of December, right? So there's your proof. Now, well, what are these losing years? Well, if the markets don't go anywhere, of course, the elders didn't care, though, about small moves. They only cared about big moves. So this would be something you'd have to stomach, but the big years would be very, very big, and that's what this system is for. It's a quasi-insurance policy on markets that go nutty, right? Bottom line is this. A way to take action and not just sit there and let yourself be pummeled would be to use this system. And listen, it's guaranteed to be profitable in dramatic markets. It's not guaranteed to be profitable when markets go boring sideways, but it's guaranteed to be profitable, right? If something dramatic happens, you're going to be in a winning trade. That's just the way it goes, right? Now, what are some negatives? Well, you saw some losing years, right? This doesn't, do great in those markets. And there's just not that many trades overall, right? It trades about once a year. I mean, we're waiting for a big macro move, and then we're holding it for a long, long time. I mean, that's given, right? So you're not going to get action. If you're an action junkie, no, you'll hate that. Not great in boring markets, as I've already said. So what's the solution? Well, why not have something like this in our lives? Like, what's the argument not to? Like, why not have a separate account? Like, why not have a market or an account, trading this system on the side or in the background while all of this is going on and you're feeling kind of down? Oh, you click over here. Whoa, I'm up big in these profits, right? The 50 is crossed and I am in the money. I mean, I'd love to know the argument against this. Like, what's the downside of having this trading in the background? Maybe not all your money, but some of your money, right? And I'll tell you this, it kills buy and hold. So if you're a buy and hold index funder, I'd love to hear the argument against doing that instead of this. I don't think there is one, right? Why hold an index fund when you could do this? I don't get it. Anyway, beyond that, though, it might be something we all should have, right? It's just something, if we want to have equity exposure, this might be something that we should just have. Like I said, just running somewhere over there where we don't worry about it. All right. Anyway, we're going to talk about more instruments. Maybe it just works on the SPY. Who knows? We're going to look at futures, and we're going to probably look at Forex too on this system and see how it holds up. So if you're interested in those results, please get on the newsletter. How do you do that? Go to scottwellstrategies.com right there. And here's all your contact information. All right. Happy holidays, everyone. So glad to be here with you. And I'll be back next week with more stuff. Bye for now.